Terra's coins were called the currency of the future, but they relied on confidence which may be lost in an instant. Last week's market sell-off wreaked havoc on the fortunes of the world's 5 wealthiest tech magnates, who collectively lost about $85 billion. And they're not the only ones. Join us as we discover the truth behind the crypto collapse. First up, losing life savings. Odosa Iyamosa spent his life savings of $5,700 on Luna late last year, on the recommendation of a friend. The 28-year-old who lives in Abuja, Nigeria, did his own study on the currency and found it to be promising. Luna's value was skyrocketing thanks to the popularity of Terra USD, another coin with which it was completely linked. Galaxy Digital Holdings, Jump Trading, and the venture investment departments of the exchanges Coinbase Global and Binance had already invested, as had some of the crypto industry's greatest names. He hoped to boost his funds to $16,000 US and enroll in a data analytics program at a Toronto college, in order to land a job at a major US corporation such as Netflix or Google. For a few months, it appeared that this strategy was succeeding. His Luna coins increased in value by a factor of 2. Then, earlier this month, Luna and Terra USD both crashed. Terra USD was a stablecoin, which meant it was designed to have a constant value of $1 at all times. However, it fell below $1 and continued to fall, while Luna tokens, which had once been valued more than $100, plummeted to below $1 US, effectively wiping out a total market value of more than $60 billion US. Iyamosa claims that his coins are now only worth $3, and that losing his life savings has sent him spiraling into suicidal thoughts. Sadly, he's not the only one. Next, we have an unstable market. Soaring prices for Bitcoin, Dogecoin, and other cryptocurrencies have caused a sort of FOMO over the chance to acquire an overnight fortune for the past 2 years. Founders of DeFi, aka decentralized finance, in which users can deposit, borrow, and lend coins, promised super high returns without super high dangers, as if traditional financial regulations no longer applied. One of the reasons behind Terra USD's success was the 20% dividend offered to holders. With its marketing, the crypto sector as a whole fueled FOMO by portraying investing in Bitcoin as a method to take control of your destiny. You have to call your own shots if you want to make history. This is what LeBron James stated in one of the numerous Super Bowl adverts touting cryptocurrency exchanges. Who knew it wouldn't age too well? Stories from many investors like Iyamosa, who claim to have lost their entire life savings on Luna, are circulating on social media. So much so, the top of the Reddit forum dedicated to the tokens has a list of suicide hotlines. The collapse of the two coins fueled a digital asset sell-off, wiping off more than $300 billion from the total value of all cryptocurrencies on May 13th. Bitcoin, which was worth more than $60,000 US in October, is now just half that. For the time being, the entire crypto structure appears to be shakier. And now, is it too good to be true? Luna and Terra USD's backers were talking as if they had reinvented finance. But where are they now? Do Kwon, a 30-year-old founder of Terraform Labs, studied computer science at Stanford, and his belief was that the tokens would be more than just another kind of digital cash. They would be a new financial system, one that would be cheaper, faster, and pay greater interest rates to savers. Terra USD was established in 2020, but didn't gain traction until March 2021, when Kwon introduced Anchor, a crypto quasi-bank where users could deposit their Terra stablecoins and earn a 20% interest rate. The holy grail of Bitcoin was creating a decentralized form of money, on which to create a whole new sort of permissionless financial environment, and that's exactly what Terra was supposed to do. The structure that surrounded the coins was intricate, and possibly one with loopholes. As a stand-in for traditional cash, these coins have become a significant component of the crypto world. They're easier to use to pay for items in the real world because they're supposed to have a consistent worth. But Bitcoin and other cryptocurrencies fluctuate in value so much that the seller of a BMW might only obtain a Honda's worth of tokens by the time the transaction's completed. Because its holders accumulated usage fees, Luna was meant to appreciate in value as the network grew in popularity. It was effectively a mullet network, with a dull business-like stablecoin in the front and the Luna get-rich-quick party in the back. Next, we have decentralized heaven. Terra has raised eyebrows since the start. Experts in the crypto community felt that it was unsustainable from the get-go. However, Kwon positioned it as a safe alternative to banks like Wells Fargo, even suggesting that other fintech businesses such as Venmo might deposit money there in the future. The chaos began on May 7th, when Luna's price had fallen as a part of a general asset price decline. Terra USD's price plunged to $99 when a dealer executed a huge swap for competitor stablecoins, fueling speculation that the dollar peg was in jeopardy. Kwon had gathered a few $1 billion in Bitcoin as a reserve to back Terra USD in the event of a crisis. business, and he projected confidence in its stability on Twitter. But it was too late. Terra USD, like other funds and banks prior to the development of deposit insurance, had a weakness. If users lose faith in the system, they may rush to sell or redeem their coins, afraid that if they wait too long, they will not receive their $1 per token back. In principle, people who wanted out could always request more Luna tokens from the network, but that too was a risk. So what ends up happening? The more tokens issued, the lower the price of Luna became, forcing the network to issue even more tokens, further compounding the decrease. In Wall Street lingo, this is called the death spiral, and deadly it sure was. Time for some other related news. Starting with PayPal allows transfer of crypto. PayPal announced on Tuesday that customers will be able to send cryptocurrencies such as Bitcoin to external wallets, nearly 2 years after the fintech giant first allowed digital currencies on its platform. The service will be available to a restricted group of US users beginning Tuesday, and will be rolled out to all qualified US consumers in the coming months. In October 2020, PayPal began allowing clients to buy, sell, and hold Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. Previously, though, users weren't allowed to move their crypto assets off the platform. Users have been asking about the new feature since PayPal allowed the purchase and sale of cryptocurrency, and as a result, the company's stock was up 0.3% to $87.08. Since last year, the crypto market has seen a rise in investor interest. Everyone from venture capital firms to celebrities and corporations have turned their focus towards crypto holdings. However, such currencies' worth remains unpredictable and volatile, reducing their appeal as an inflation hedge. So we have to wait and watch how this pans out for PayPal. And now, is Shiba Inu next in line? Shiba Inu, which had been one of the cryptocurrencies the hardest affected by the market, is one of the coins that has made a strong comeback this time. But crypto experts don't think that Shiba Inu is out of the woods yet. There are still a lot of threats that might convert this currency into the next Luna. The meme coin Shiba Inu isn't looking good, with experts projecting a value of $0.00018750 by the end of 2022. This would represent a 7.6 decrease in value from its current price of $0.00002029. Shiba Inu is virtually in the same category as Luna, according to crypto specialists. They're ventures that aren't based on a firm foundation. They have no practical application, and the most difficult aspect of the Shiba Inu is its lack of usability. This is due to the fact that Shiba Inu began as a meme currency with a big market cap based on excitement rather than an actual product. Finally, we have whistleblowing at Terra. A whistleblower known as Fatman revealed a conversation log on June 1, 2022, claiming to leak a discussion about Terra's blockchain halt before it occurred. Fatman has been mentioned earlier on as the Twitter account that accused Terraform Labs, TFL, and Do Kwon of a number of unethical practices. An unidentified source gave the whistleblower a document showing a number of Terra community members, and Do Kwon discussing a chain halt. The first allegation involves infrastructure developer Jump, who Fatman alleges offered Terra a bailout arrangement in May 2021 that included monthly Luna token repayments worth millions of dollars. He went on to say that Jump is responsible for tricking retail customers into losing billions on UST, but especially Luna, putting the accusation at Jump CEO Kanav Korea. FTX CEO Sam Bankman-Fried is also named in the allegations, as is a handshake agreement involving the Solana-based decentralized exchange Serum. Fatman provided no further details, but investor and crypto banner host Miles Deutscher described the disclosures as groundbreaking if accurate. That's a wrap for this video. Do you think cryptocurrency is too volatile to be trusted? Or is it a high-risk, high-reward kind of situation? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.